Well, I'm real excited about this next segment, this next guest. Well, let's break it down. Half a dovish Federal Reserve means that the central bank is favoring policies that stimulate economic growth, often by lowering interest rates to boost unemployment, and it helps investment, even if it means taking on more inflation risk. Inflation, a word we hear so often on this show and many others. This expansionary stance is taken during economic slowdowns, when the Fed prioritizes job creation over controlling price increases. We brought in someone who's not afraid to act. Welcome to the show, Eddie Ghabour. Eddie, I was watching videos on you, and I watch Scott's shows when I'm not helping him out. You're by far one of my favorite guests. You're so knowledgeable, and you have strong opinions. Now, you sent me some show notes, but let's tell our audience what happened out in Jackson Hole, and what did you do to act upon it?
Well, thank you for having me. Thank you for those kind words. Last week, we came into the week with a higher cash position than we had in a while. And we had a decent sized sell-off last week, especially in some tech names. So we put a lot of cash to work, fortunately, heading into Friday. And Friday even surprised me with how dovish the Fed was, especially after their hawkish press conference they had about a month prior. And some of the biggest things that really stuck out to us that just really gives us a strong conviction on the direction of this market over the next 6 to 8 months is they said that inflation was going to be transitory in regards to tariffs, meaning that even if we get a spike in inflation numbers in September, which we actually expect to see, they're going to look through that. And they're going to continue to focus more on the labor market. And that's a big switch in their narrative versus just sticking to their 2%. So basically what they're saying is they're picking the economy and economic growth over spiking inflation. And we think that is the last piece to the puzzle that the bulls needed in order for this market to really take its next major leg up over the next 6 months. And we think that's exactly what we'll see.
Yeah. And when I was younger, I messed up the trade, the Bernanke put. I didn't understand it. I didn't understand how much safety Fed Chair Bernanke gave. Is this similar to that? Is this, in your mind, like a little Jay Powell put?
Yeah, I mean, when you look at the saying, don't fight the Fed, when you look at the other dynamics, it's all liquidity, right? They're increasing liquidity, and it's going to help small businesses and small companies because those are the ones that get hurt the worst with tight monetary policy. And so if the Fed, whether you believe or agree with what they're doing, doesn't matter. You just can't fight what they're doing. And they're giving you the green light from a liquidity perspective. And there's always risks. We have to be aware of that. But the setup looks pretty darn good, is about as good as you can see at this stage. Look, you very rarely have a Fed cutting rates in a non-recessionary environment. And that's exactly what we're going to have. And so that should add a tremendous amount of fuel to this bull market.
Yeah, and that's interesting. I was out to dinner. I'll give you a scenario. I was out to dinner with someone who's very successful. Of course, he has successful friends. He deals with someone who imports tens of millions of a certain supply for safety equipment from all over the world. He said a few months ago they all front loaded on these tariff news, but he was paying about $300,000 a month in tariffs, and his company's now paying $2 million a month. Is it possible that some of this upward pressure on items is going to start to hit the market in September, October, November, Eddie?
It is. And this is why we said we do expect to see the inflation. So the next inflation print, I believe, is on September the 11th. We actually expect to see inflation start to increase from a year-over-year perspective. And that could cause the bond market to get a little bit, have a panic attack. But at the end of the day, as long as growth accelerates economically, we can handle that. What you can't take is inflation rising and starting to see growth come down. That would be a real problem economically as well as for the markets. But due to tax cuts, deregulation, that money flow has not even shown in the economic data yet. So we think that will far outweigh any spikes in inflation that we'll see due to tariffs.
Okay. So you said you put money to work. Be more specific. I know you have very specific things you like, and then you put that money to work. What'd you buy, and how long do you think you'll hold it?
So one of the things that we did is we did increase our NVIDIA position. NVIDIA was taking a decent size hit, and going into earnings week, we thought that was a pretty good risk reward. We've also started to broaden out our portfolios. You don't just have to own tech anymore. We're bullish on small caps. We think that's going to be an area that actually leads and beats the S&P over the next few months. We also have home builders now, ETF in our portfolio, as well as consumer discretionary. Those are three areas that we think, based on our thesis, with the Fed and growth accelerating, are going to be areas that potentially outperform the S&P. So we broadened that out, but we still have our core tech holdings because at the end of the day, the NVIDIAs of the world are probably some of the most important names in the market due to the weightings they have on the S&P. But we will be buying dips on the broader areas that I just discussed.
Yep. Any sneak peek into what we could expect for NVIDIA earnings tomorrow? Always some fireworks.
You know, there's going to be such a focus on them. I think their earnings should be strong. It's going to be really all about their guidance. And from our understanding is the chip demand is not going away. NVIDIA is best of breed in that space. So I expect to see a very strong earnings as well as outlook looking forward for that name. And if for some reason it sells off after earnings because it's running up right now, we'll be buyers again because we're looking out 3 to 6 months and we believe those names will be higher.
Eddie Ghabour, such a pleasure to finally meet you. I watch you all the time. You're one of the best, and you're someone who's not all hat and no cattle. You have the cattle, my friend. You're putting it out there. Be interested to see what NVIDIA does tomorrow. Thanks, Eddie.
Thank you.